First up, we have a presentation from Stealth Group Holdings. Stealth Group Holdings is trading under the ASX code SGI and has a market capitalisation of approximately 25 million. Stealth is a leading Australian distributor and a retailer providing everyday products and solutions to business, trade and retail customers. Headquartered in Perth, Western Australia, Stealth operates a large Australia-wide distribution network, delivering its products through multiple customer channels of all types and sizes. Presenting from the company today is Group Managing Director, Mike Arnold. Mike, welcome back to the network and please take it away.
Thanks, Manny, and thanks for having me on today. So I guess our business has presented a couple of times on this platform. If you can just move through the slide deck, please. And today I just want to talk about a recent acquisition, which is effective from the 1st of June. And also take you through the acquisition opportunity, the strategic rationale, the pro forma financial numbers, as well as the strategy and our 2024 guidance, which obviously everybody who, from an investor point of view, are really keen to see. If we can just move on to the next slide. Thank you. So as many described, we're a distribution group. Really, our business has gone to a conglomerate strategy, which is a diversified portfolio spanning across both industrial, the retail and the trade industries. Our motto is supplying products and solutions for every workplace, and that's extending to now every person. So our organisational structure is really designed to have diverse operations, facilitate the management of that, but also have business unit leaders and teams that operate within those, so we ensure that we have a really strong offering to market. Over the last 5.5 years, we've really pivoted quite significantly from a $24 million revenue turnover in 2018 at our IPO to today, at the back of this acquisition completion, 160 million, so quite significant in its own right. We're acquiring Force Technology International for $9.5 million. It's a market-leading distributor of mobile accessories to the consumer market. I'll walk you through that. It's absolutely a plug-and-play distribution model and fits into our operation really nicely. EBITDA, 8.5 million on a pro forma basis before transaction costs. We don't expect those to be much, and a significant pipeline of opportunity to grow. Next slide, please. So our business units from, as I mentioned, the conglomerate strategy is an industrials market, their existing brands that we have acquired over the course of the last 5 years. And on the right-hand side now, from a consumer point of view, the Force Technology business. And all those operations cover the sectors of business, trade, commercial, and also retail. Moving on to the next slide. So in brief, as I mentioned, it's a plug-and-play fit. It really fits strategically from a higher margin, capital-light, cash-generating business. It's got a diversified product range of its own label and private label, which is about 48% of total sales. Obviously, that's the type of product type that we like, and also have exclusive brands. It distributes across Australia in all states and territories, and what it does, it gives us significant firepower to grow. It's from a mobile accessories perspective, it's an everyday need in the workplace and at home, and that's anything these days from cords to protection from a power point of view, from protection with cases. We have power that covers your phone, your watch, and your AirPods at the same time. There's a private label product that sits within Coles on the Coles shelves that you can see, NRG. And even to the point from an evolution perspective, we've got these little things that sit on your key ring, which is for chargers. So for tradies, for people who are truck drivers, delivery drivers in a warehouse and so on, all those products are really, important, particularly around protection of phone cases and those sorts of things. One of the new products, even from a lifestyle perspective, is an aspect like a water bottle. And this is the genius of these things these days, magnetic top, so you can either have it sitting on your desk at work or you can actually have it from a lifestyle perspective. So complete range of power-based products as well as everyday consumables that is a need. If you can move on to the next slide, please. So strategically, it fits. Our strategic rationale has been really consistent for the last 5 or so years, where we completed our first major acquisition October 18. So we look at our revenue base, we look at its contribution within products, its extension in adjacencies, its store footprint, geographic opportunities in terms of its growth, and really its operational efficiency. So, as I said, from a plug and play point of view, it's not only just about the distribution model, it's everything about the customer. And at the same time, it's also about the cultural fit of the people. So this has been an organisation we've been in discussions with for about 5 years. So it's 5 years in the making. Fantastic strategic fit, so much opportunity upside. Can just move on to the next slide, please. So the transaction, we're buying 100% of the shares, as I said, for 9.5 million. That's an implied multiple of just less than 4 times EV of EBITDA, and that's consistent over the last 2 years. There is an outperformance payment in FY26. So the 2 vendors who have owned the business for 32 years are going to be combined shareholders within the new Stealth organisation, taking up about 12.5% scrip. So the deal is a scrip and also Stealth taking on the existing working capital facilities that Force has in place with the Commonwealth Bank. So we've done this for future strategy, for future growth and development with the vendors, and they'll be around for at least a 2-year period. There is a CEO in place and a management team that's been in place for 5 years, so it's business as usual with an opportunity to grow. From a financial metrics perspective, it's EPS accretive immediately on a pro forma basis, about 40%, 25% before any synergies for next year. Our debt level is 1.3 times leverage and be around about 1 times in the course of 12 months' time. So we've really focused in the last 4 years of paying down the debt. We've paid another $1.2 million down in fixed debt, which only leaves about $1 million now. So we've really got a good, strong balance sheet to be able to take this business forward. Typically, you'll find synergies in these sorts of transactions. So $1.2 million of cost synergies that we'll get the full benefit of in year 2. Equally, from a profit point of view, immediate channels without even looking at new growth opportunities gives us the about 2.3 million, which will occur in the second year as well. So most of that will start in the first year, the full benefit in the second year. And we're expecting to close this out over the course of the coming 5-6 days. Next slide, please. So collectively, $150 million in baseline revenue before any growth planned in next year. We have a pipeline of $60 million for FY25, $8.5 million of EBITDA. 90% of the products that we sell are non-discretionary items, so it's defensive in terms of its end market. Stealth operates in a $60 billion market. It's $1 billion wholesale accessories market with Force, which has about 5% of total market share. And we expect that to double in the course of the next 12 to 18 months. 250 people, 61 of our own company asset stores, as well as independent operators that join our group. We now have 3,310 reseller stores that operate Australia-wide. So it's a significant operating platform, unrivaled anywhere in any market across Australia. So it's going to be a great journey. Next slide, please. Next one. So Force, 32-year business, 44 million in revenue, as I mentioned. It wholesale distribution, it designs, it manufactures, it also markets and it sells accessories, both in the business sector and also lifestyle. Its range is quite diverse in terms of its phone, tablets, its screen protectors, its audio, automotive, which fits in really nicely with what we have today, as well as data and charger cables. So every individual that's online today, everyone in your office that you have working for you or working with you, everyone has a cord. Everyone needs a portable charger. Everybody needs audio headphones. It's an everyday essential necessity that is obviously a requirement, and that's what we like about it. The new channels, obviously, education is a massive area, construction, manufacturing, energy, government, particularly in areas like police force and military and healthcare. absolutely a necessity to have these types of products sitting in those sorts of sectors. So we're going to be pushing hard and taking the products into that new area, new adjacency, existing platforms that we have customer relationships. So it's about penetrating that. Next slide, please. So just to give you a picture view of that, got our own private label product, which is EFM. We also represent exclusively in certain verticals, Otter Brands, which is a great, global brand, about $1 billion US business, and cover all those areas that I've mentioned already. If you can move to the next slide, please. So customer channels, telco, convenience, consumer electronics, and independents. Major brands, JB Hi-Fi, Good Guys, Macquarie came out on the 21st of May and said that they've actually been moved in terms of their analysis of that company to a outperformance over the course of the next year or two. We are, our product EFM, as well as our Balcom product, is within those stores, but it's also in Officeworks and Retrovision. Coles and 7-Eleven, we have private label product that sits in there specifically designed for those particular stores. And then we've got the independents and the online marketplaces with that. Vodafone, Telstra, Optus are all stores that is distributed to as well. Next slide, please. So from a percentage and total sales perspective, these are the brands we represent: Samsung, Casemate, Belkin, Lifeproof, Otterbox, the Pop Sockets, private label brands, and our own brand, which is 30% of total sales. Next slide, please. So for every workplace, these are the types of products we're going to be pushing out on a construction site, in an automotive. These products are designed specifically for that workplace environment, and this is the massive new opportunity for the Force business as they move combined with the Stealth business today. Next slide, please. So key messages on this: plug and play, fits really nicely to our existing distribution model. It's a high margin product. It's capital light. It's cash generative. So it ticks all the boxes in that regard. The opportunity within the private label area and the own label within our industrials business, a lot of those brands we just showed you, there's an opportunity to expand that in our own range, which generates margins between 50% and 70%, not our average of 30%. We've got now significant firepower with 3,300 new distribution outlets. However, all those particular customers have workplaces. They have warehouses, they have distribution, they have people wearing workwear clothing, they require everyday consumables. So we're going to be looking at providing product not on the shelf, but actually to those customers for their own businesses. And the mobile accessories as an everyday need. So taking through to the last slide, and then I'll hand it back to you, Manny. Sorry, just go back one. So from a financial guidance, we obviously haven't got the Force business. We'll take the account from the 1st of June and it will close in the coming days. From a existing Stealth organisation, our sales are up about 2 to 5% year on year. We've really continued to go on a rationalised right-sizing process during the course of the last 12 months, making sure we're really focused on profit. So our profitability will be greater than 25%, EBITDA more towards 35%. Net profit will be in excess of 25%, which obviously then drives our EPS accordingly, plus 25%. And our capital expenditures are up a couple $100,000, which has been in tech. So we've been really disciplined in our approach. It's great. Our profitability is increasing, 25% increase in this market when predominantly all companies are actually having the opposite effect. It's a fantastic result and just shows the robustness and strength of our business as we go forward. So thanks, Manny. I appreciate you allowing me the time to take everybody through that new acquisition. This will be up on the ASX today, been on the Finance Network, News Network platform today, and obviously across Share Cafe.
All right, Mike. Thank you for that. Exciting times. Looks like a great acquisition. Now, whilst you were giving that prezzo, we've had quite a few questions come in actually from our participants. Now, I might not be able to ask them all because we're not going to have time, but I will. I'll get a couple done, and the ones that I don't, and there's one question in particular that's coming which is very specific and detailed, we will pass those questions on to Mike, and he can come back and answer those online for those of you that have put your names on it, of course. So, Mike, first one I might give you is a question around the integration of the acquisition, in particular with regards to management. So the question is, how will Force be integrated into the Stealth business in terms of key management leading the new unit?
So there's two distribution or business units. We have an industrials business distribution unit. We also have a consumer. So the back end will be consolidated, and we're talking finance, technology, legal, human resources, typical aspect. But in terms of its customer facing, those particular channels will still be owned by the Force business and the current management team. What we will be doing is having a development team focused on cross-selling the customers, cross-selling the category management and the experience. So it will be taking and dragging different individuals with different competencies based on those relationships to expand the offering. And, in its most simplistic term, we have a distribution chain that has stores, sales force, online channels, distribution centres, delivery platforms. All those are consistent. Plug and play means putting the products through those channels, and it's how you manage the customer at the end, and every customer has a different requirement. So we've got an infrastructure to cater for that.
Okay, great. Now you've touched on this in the presentation, but I'll ask the question anyway, just to clarify it. What is the lockup period, if any, for the Stealth shares issued to the Force vendors?
There is no lockup. So I specifically didn't put an escrow on these, and these guys are motivated, the two vendors. They've got history, 32 years with the same company. Their motivation, and they've been watching the Stealth business for 5 years. They like what they can do. They're going to contribute to the wider Stealth business. There's a number of strategic initiatives that are in play. Their incentives are about the outcome of the FY26. So there's a cash component that they'll receive on the performance of Force, but that will obviously drive share price on Stealth. So their motivation is going to be, at least for a couple of years, to be along for this journey. So, when everybody wants people locked in, we don't need to. It's absolutely there for the long-term journey.
Okay. And one more question before we wrap it up, Mike.
Sure.
There's a question here, just questioning, what are your strategies for growing market share now going forward? Is it acquisition-based, organic, combination?
Yeah, good question. We've been really clear and consistent for 5 years now, or 5.5, and that is we have a strategy that is organic and inorganic. So at $160 million base, there's $60 million of organic opportunity that we're currently working on, and we're looking for most of that to drop into the 2025 period. We have a growth strategy over the 3 years thereafter to get to $300 million in sales, and that's a combination of organic growth as well as acquisition-based. So if every acquisition we've done has been between 3 and 4 times multiples, our peers are buying companies between 6 and 9 times multiples. So we're disciplined about the way we go in our acquisition. We don't load up our balance sheet. We also make sure that obviously it's the right strategic fit and, fits our operating model. So it makes sense in the current environment for us to be able to consolidate where commercially it makes sense and it adds value to shareholders. And I'm the largest shareholder. So, my motivation is not only about making sure that the organisation has long-term growth with both acquisition and organic perspective, but also making sure that we obviously demonstrate value for the wider portfolio of investors that obviously are in our group. We've increased our investor base by 100% in the last 12 months. So we're getting out there. A lot of people are starting to recognise this. We've come under the radar, and a lot of exciting times coming forward, Manny.
Mike, thank you for that today. It was great. And have a fantastic weekend. We'll see you soon.
Thanks very much. Thank you, mate.